The ASX is dominated by iron ore miners. The material sector alone makes up more than 20% of the ASX 200, with three companies, BHP, Rio Tinto and Fortescue Metals Group, all amongst the top 20 largest companies on the market. By investing in these stocks, investors gain exposure to some of the world's best mining companies, but is now the time to buy. Of course, the fortunes and therefore investability of these stocks comes down to what's happening with the underlying price of iron ore. After hitting as high as $220 per tonne in 2021, the spot price of iron ore has dropped back to $100, driven by weaker growth in China as a property slowdown and COVID-19 lockdowns weaken demand. The uncertain outlook for iron ore is raising doubts about the big three miners' future profitability, with the record profits and dividends they posted tipped to normalise going forward. Analysts are particularly bearish on Fortescue Metals Group, which does not boast the diversified revenue streams from other commodities like Rio and BHP do. Although expected to announce another year of record profits, expectations are for a drop in earnings in the years ahead. Earnings per share is tipped to contract to $2.04 and decline over the following 2 years as profits revert to long-term trends. Fortescue has a consensus sell rating among 19 analysts, with 11 recommending that action, 7 suggesting a hold, and just 1 a buy. The consensus price target is $17. The drop-off in profits for the iron ore majors has already been confirmed by Rio Tinto in recent weeks after the company posted its half-year results. Profits fell by nearly 30% and its dividends slashed in half. The stock does trade at a more attractive multiple than its larger counterparts. However, it does point to a company that has seen profits peak for this cycle. The company's full-year dividend is tipped to moderate to $6.38, then to $5.45 in the next 2 financial years. Analysts are positive on the outlook for Rio Tinto though. 3 recommend a strong buy, 8 a buy, and 7 a hold with a price target of $115.50. BHP is the most richly valued of the big three miners and reflects the company's lower cost base and stronger growth potential. Those big cash piles accumulated by BHP are already being put to work too, as the company now looks to grow through acquisitions. Earlier this year, BHP merged its petroleum business with Woodside to create a top 10 global energy company. It has also been revealed recently too that BHP has put a $25 per share offer to Oz Minerals to increase its exposure to copper and nickel, an offer which the company has since rejected. Ultimately, the iron ore majors are a staple investment for Australian investors, but as with any cyclical stock, timing is everything. An investor must be confident of when it is time to buy or be prepared to hold throughout the fluctuations of the economic cycle to see full value.